discuss the longer-term impact on the commodity market of the escalating tariff war. And to discuss exactly that, we now have Mr. G. Chandrashekhar, commodity expert, now joining us. Sir, Trump tariff uncertainty continues, and after US announced reciprocal tariffs, countries have now started retaliating. We had China imposing 34% tariff on US goods. Since you've been tracking commodity market for so many decades now, how do you assess this tariff news and its impact on the commodity market globally, slightly over the longer term, say 5 to 7 year implication?
Fortunately, this round of retaliatory tariffs announced by the Trump administration has, in my view, very substantially exempted the commodity markets. And the impact, this round of retaliatory tariff will have not much of an impact on global commodity markets. And I'll tell you why. The commodity markets are far less affected by this round, primarily because earlier, last month, Trump had announced tariffs on steel and aluminum import. Okay? And this time, steel and aluminum have been kept out, number one. Number two, other commodities like copper and semiconductors, which obviously are metals intensive, lumber, etc., energy products, bullion, and select other sensitive critical commodities have all been kept out of the purview of this round of retaliatory tariffs. And therefore, the immediate impact of the retaliatory tariffs announced by the US are going to will have negligible impact on commodity markets, not a heavy impact on commodity market.
So you're expecting negligible impact on the commodity market as far as these tariffs are concerned. But how do you expect countries to now react to these reciprocal tariffs which have been announced by US?
All countries are now assessing their situation. All countries are evaluating how they should respond to this retaliatory tariff imposed by the US. And there are a lot of sensitivities involved in other countries imposing countermeasures. For example, many of these countries are dependent on the US market, not just from a market perspective, but also from a defense and security perspective. And therefore, countries would be very wary of very stridently taking countermeasures against the US. This is number one. China, of course, is in a very different league. China, after the US, is the world's second largest economy, $18 to $19 trillion. China is also quite strong in its technology advances. And therefore, China is in a position to stand up to the retaliatory tariffs imposed by the Trump administration, and therefore they have retaliated.
Correct. So China has retaliated. But from an India standpoint, if you can tell us, how do you see tariffs affecting our economy and the commodity market back home in India?
From an India perspective, I want to mention very clearly that we are running a trade surplus with the United States. Our trade surplus is, of course, relatively small at about $45 billion as compared with China, which runs a trade surplus with the US of $280 billion. Ours is quite modest, about $45 billion or so. Yet, in my view, going forward, Trump administration can potentially even try and reduce this trade surplus that India is enjoying. My big worry is actually the imposition of tariffs on highly labor-intensive exports from India, like, for example, textiles, gem and jewelry, seafood, leather products. So these are all highly labor-intensive products that we export to the US. And when these export goods attract high tariffs, I think it can potentially affect Indian export companies It can affect our export performance.
That's as far as the impact of the tariff war on Indian economy is concerned. But also, what are your thoughts on China? Because China is the biggest consumer of most commodities, and with China-US tariff war now escalating, and also because China is already trying very hard to revive its own economy, what impact will this have on the Chinese economy and its real estate demand? Do you expect revival anytime soon?
Certainly, this is in some way negative for the Chinese economy. There is an expectation that Chinese GDP growth, which has already been slowing over the last 3 or 4 years, this year in 25, the initial expectation was that it will slow to about 4.8% GDP growth. But there is a strong possibility now with these tariffs, Chinese economy will get even slower. The growth could be 4.4% or 4.5%. So this is a real possibility. This is number one. Number two, but China can actually devalue its currency, devalue the yuan, which can make their export still a little competitive because of the depreciation of the currency. But that's a strategy which the Chinese government may adopt. We still don't know what the situation is. But look at steel and aluminium export from China to the US. Obviously, they have come under heavy tariffs by the United States. As a result, I feel steel and aluminium production in China is likely to slow down.
Metal production in China is likely to slow down. That's the word coming in. Mr. Chandrashekhar, thank you so much for taking your time out, joining us here on ET Now and helping us decode what the implication could be on the global commodity market of escalating tariff war. But
if you like this video, then like, share and subscribe to ET Now.